Hi there guys, I'd like to thank you for stopping by on this video, and this is going to be more of an introduction, like not as serious of a video, but something to help you guys understand a little bit more about me. I don't want to do a face reveal or anything on this video, mainly because I like to be a little mysterious from just having my voice in the background on this. Now, the portfolio that I have here, and I pretty much named it after my YouTube channel as well, Acorn Oakland Dividend Portfolio, but I've actually had this since I started back in July on this platform. I previously had an Acorns account, but I'm no longer using it because I didn't really like how much money they were actually taking out of your account each year, depending on how many subscription tiers you went, whether it was their just their core, their later, which is their retirement account, or their spend, which is their form of like a banking account. But technically, the app I didn't want because I wasn't much of a spender, so I kind of figured, I need something else that where I could just like park my money and all that rather than going and being a spending addict. So I pretty much came to this instead after I got a new banking account that would work with this because I have a Chime bank account and they didn't allow that on this for M1 Finance, so I had to get a bank that was compatible with this. And I pretty much dumped $350 into here, even though I'm on a low market gain. It's actually slowly going back up from what I've noticed. Well, it's getting there anyways. It was at like 340 something earlier after the market opened a few hours ago, but now it's at 341.07. Oh, now it went up by like 10 cents, but it's mainly because of some of these other stocks. But the the thing that I learned about on this was before I even started any of this, I used to do it on simulators, basically, because at first with me, I tried forex trading at first, and I tried to do the currency and commodity trading, and that didn't work out so well, even though I was using a practice account. So I didn't want to risk any of my money at the time. And to let you know, this $350 is like most of the money that I've had on me, so it might be shocking to hear that, where I barely like left myself with anything. I mean, I didn't completely deprive myself, but I still have some money on me. It's just most of it got stuck in here. And I actually have learned a lot from since then. I already knew that forex trading wasn't for me, so I moved away from that. And then when I was on Second Life, I actually learned about stock investing, but instead of it being real world companies, it was basically companies within the virtual world. And I learned a bit from that, even though it was only for a year. And eventually, Linden Lab, that owns Second Life, they actually decided to like shut it down because they had this thing called the skill gaming policy, which only allowed people to play skill games within their regions that are labeled under skill gaming. They couldn't do it like out in the middle of nowhere. So after I got screwed over on that, even though the owner tried to make it web-based, only web-based and not have the interaction in the virtual, basically what happened was that he got himself into trouble with PayPal because he wasn't authorized to even do anything by making a virtual currency to use to trade in the stock simulation game that we were playing. And he pretty much got chances are he got like arrested because they wanted to investigate him because he was actually pulling a scam of faking an IPO on people on that. So he like stole a lot of money off of everyone that was still involved after the whole thing got cleared out. So then I figured out like, well, I kind of figured like, what am I gonna do afterwards? So what I did afterwards was I actually went to a virtual world called Entropia Universe, and they had estate deeds there, and they were actually at a bargain at the time when I jumped in about like 2015, because they were like, for like Calypso land deeds they were $140 at the time, somewhere around there, and then Arcadia Underground deeds they were $5 I think a piece at the time before they all got sold out. And the deeds on there, they worked like dividend stocks as well, but the only difference was is that they were more sped up than how you're looking at it here with these stocks. Basically, the estate deeds on there, the Calypso land deeds paid out weekly, and then Arcadia Underground deeds paid out daily. So the daily ones, they were more like real estate investment trusts, basically. And then, well, basically like a just for fun money to earn from those. And then the Calypso land deeds, they're more like these quarterly paying stocks I have, only they paid out weekly instead. So if you had a bunch of those, then you would make a really good amount of money each month in the virtual world. And they had like went further than that, but they were more like stocks for those that were like tier 1. They're more like tier 1 estate investment trusts or estate deeds or whatever it was for real estate. Well, you guys get what I mean, but there was that. So then, after a while from doing that, I recently left last year because it was mainly because in 2018 my gaming laptop was actually degrading and the hardware was not doing so well anymore. And I just figured, I got to get rid of this. So I basically pushed that away, even though I had a good amount of money invested in my avatar. I basically lost all that, mainly because of people that were not exactly the nicest on there, because they tried to talk me into things and getting me to spend stuff that I didn't really need. And I was really supposed to be taking the virtual currency on there and reinvesting it back into my investments instead. And I kind of steered clear of Second Life and Entropia Universe because over time their communities have gotten so toxic that it just like built up over time of how much tolerance I had with it. And I'm just like, you know what, I've had enough. So I just left them afterwards. Then after that, I didn't really do much afterwards in 2018, but then after I got my Chime Bank after my birthday when I turned 29, as of last year from August, so it's been about a year now since I rebounded, since I didn't really have much money on me at the time, because through 2016 to 2018 I had no bank account, so that was kind of rough to deal with. And what I did was I first started with Acorns, and I can actually show you the portfolio on here because I actually mimicked it in a pie here. What I did was I just looked up a picture because I closed my account recently this year because of their restructuring of their fees, which I did not like a whole lot because they started double charging people for higher portfolio values for each year, so I didn't really like that a whole lot. But I actually went through and this used to be like my old portfolio for this. And what happened on this was, at first when I started, they actually had it set to where, I had it set to where it was just like taking out 2 times roundups, and then I did like $5 a month or something just to test it out. And my money just kept going down, 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 down. That was because of all the panic selling back in October between December. And I just kind of figured, maybe I should just make an initial deposit and place in like a small amount of money. And I did something that Charlie Munger talked about this year called the spearfishing method. And basically what he means by that is when you take your money and the market is going down so far, you just lump sum all your money in from hedging. And if those of you that don't know what hedging is basically manually putting money into your investments. And basically what I did was, when it got around to like December 27th, I think, like 2 days after Christmas time, I just took like $35, tossed it into my Acorns portfolio. And then afterwards, the New York Stock Exchange had their Christmas rally, and then the stocks really shot up afterwards. And then I was making a real good gain out of it after that. Even though I was testing the whole thing out, I kept putting money in to get positions in for certain areas. And then eventually, months down the road from this year, I just kind of stopped and started using this instead. So basically, we're going to get into the portfolio here. And at first, I used to have it set to where it was like, which one is it that I had? At first, I had like too many holdings in it, and then I kind of made it this instead at first, where I want it to be Apple, BlackRock Inc. Oh wait, that's Black Line, but that was supposed to be BlackRock Inc. Let me go ahead and change that so I can save that on here. Whoops. Let me just look at it on here so I can add it to the pie. Alright, it's done. Save. Alright, so at first, I had it set to Apple, BlackRock Inc., Chevron, Coca-Cola I still have, and I've never sold that position because that was too good to give up. I'm just going to continue to put money into that. JP Morgan Chase Co., Johnson & Johnson, McDonald's Corporation, NextEra Energy, Verizon Communication, and Waste Management. The thing that was the problem was that most of these stocks were way too expensive for me to buy. So that's what my old portfolio was before I sold the positions and then reinvested it into these stocks instead, which were slow and steady. Now for Coca-Cola, AT&T, and Bank of America, they were kind of speculative gambles, to be honest. And so far they're not disappointing me a little bit. Well, it's disappointing me a little bit because of how Bank of America went down, but Coca-Cola is not disappointing me so far yet because it's starting to become overweight, and I got about a share, close to a share and a half, hence $7.45 overweight, and it's got a $2.21 gain so far. It's a 4% gain for today, and it's up at $53.87 currently right now. So I had a few dollars gained out of this, which is not bad. And then my other speculative gamble, which is AT&T, I basically looked at these to see what was a Dividend Aristocrat stock. It's at $75.11, $6.83 overweight. It's got a $1.50 of a total gain, and it's not doing so bad so far from this morning. And it's at a 15-cent gain, so times that by 2, that's 30 cents from the amount of shares I have, which is a little over 2 shares for a fractional share. Next is Hormel Food Company. Well, Hormel Foods Corporation, basically. This is at a small gain, and it's $2.52 overweight, and it's a little bit more than a share and a half of shares, and it cost me $70, and it's $42.08, and it's at $42.10 so far. This one I would describe a little more volatile, but it's only because of the recent events that have been going on right now. So it's not as bad, but that one's getting a small gain off of it. And then Bank of America, I have 2.5 shares with them. It's $1.20 underweight. So whenever more money comes in, whether it's dividends or money that I'll manually put into this later on, it's at $6.52 in the negative. It's down by almost 10%, but it's back in the positive right now. It's at $26.55, and the price I paid is $29.14 for this stock. But it should go back up eventually after things have settled down from what's been going on lately. I don't want to get into political stuff because I don't really like talking about a whole lot. Then my last one is Southwest Airlines, but Southwest Airlines and Hormel Foods Corporation, I've looked at their balance sheets and stuff, so these weren't speculative gambles. And Southwest Airlines Company, I have about one whole share with them, and it's $15.61 underweight. It's at a 39-cent gain right now. It's at 0.75%, and it's starting to go back up right now currently. It's at negative 11, but it should be fine after it goes back up, because I'm not sure if it's because of like all the new stuff next year, because people were talking about the Real ID thing, and the Real ID pretty much you have to use for getting into airlines like this or others, so you're able to travel, or you can get into military facilities or anything like that. So hopefully that doesn't hurt this investment that I made, because I saw that their progress on their balance sheet has been growing ever since, and they're trying to keep their expenses lower. So that was an attractive stock for me on this, so that's why I put money into this instead. I would have done Delta Airlines, but I just figured, I don't want to do that because it was a little bit more, and the stock didn't look attractive by looking at their charts from on here on N1 Finance, and Southwest Airlines pretty much had a better deal because they were a little cheaper, about $10 cheaper. So, yeah, pretty much I'll be trying to do these videos every now and then. I don't like having an exact upload time, but I want to wait and do it a little bit at a time to see how much has changed in the stocks. And pretty much I'll see you guys on another video. If you guys got any questions about me, or wondering why did I invest in these stocks, basically for that, just to answer that, I wanted slow and steady investments that were not very volatile and had a PE ratio of around 30 or lower, because I wanted some investments that were sustainable and paid out like a good dividend as well. Like AT&T is $2 a year per share, so that's $4 in my pocket each year, plus dividends increasing, because all these are aristocrat stocks since they've been increasing their dividend for the past 25 years or more. So basically, I wanted stocks like that. I wanted to be dividend growth, but I wanted it slow and steady and sustainable. So if you guys have any questions, leave a comment down below. Like this video, subscribe to this channel if you would like to see more videos like this on updates of my portfolio. And if you guys want to check out the portfolio yourself as well, I will leave a link down below in my description showing you my portfolio on the link that I'll leave further for sharing it. And I'll see you guys later on another video. So take care, and I'll see you later.